In these 5 trades, I use Mark Minervini's Volatility Contraction patterns, and I made just under $25,000. However, had I just held these positions a little bit longer, I could have made $146,000. So what I'm going to do is I'm going to show you all 5 of these trades. So it's going to be a post-analysis. So let's jump straight through it and let's see how I could have traded these a little bit better. So the first chart that we have up, and I'm going to have to move me over here. First chart we have up is Overstock. So you can see the brokerage statements. I'm doing this as proof as well. So what you can see is I bought on the 19th of July and the 19th of June and sold on the 29th of June. So you can see where I bought here, and I've got my trusty magic pen so we can make this hopefully quite interactive. So you can see the date that I was buying, and I'm going to change this ink color to black. So you can see the date where I was buying in here. And overall, I quite like the setup, and I call these Wyckoff wave patterns as well. So overall, I like the setup. We can see that first and foremost, supply volume had been decreasing, and specifically on these final couple of days in here, right before the entry, note how tight price was getting. We can see overall, okay, volatility also decreasing. So we have volatility very low. So then what I was doing here was just timing the breakout as we broke this line of least resistance, which was just over $24. And you can see that we have a pop-up in volume. Okay, so we can see that there. We have a synchronicity between the volume increasing and also the spread of the candlestick increasing. As I said, I really like this period in here, how we see supply decrease. We have the tightness in the price on these 3 candlesticks prior. I take my trades at the end of the day so I can better interpret the relationship between price and volume. And then what you can see is I made around about 15% gain in 6 days. So I sold the position here. But what you can see, had I have held it, the position has now gone up over 145%. So I made $4,156, which you can see up here, okay, relative to where I bought in. But I could have made $36,152. So again, something that I'm doing, and hopefully by doing this, okay, I'm by absolutely no means perfect. Okay, you never get to the end with trading. You never kind of achieve the final destination. You can always learn, you can always grow, you can always develop your process. You can make it more efficient, you can optimize it, you can obviously make more money with it. So what I'm doing now is just doing this post analysis on trades I've taken that were good trades, okay, and I made money in them relatively quickly. But it's okay, how could I have made this trade better? What measures can I start putting in places to potentially have captured more of this upside running room? So moving on to the next one, which is Livongo Health, which is quite a popular one at the minute. So you can see here that I bought on the 16th of June, sold on the 22nd and also the 23rd. So I bought 1,000 shares and I scaled out 500 shares each time. So what I tend to do is I'll de-risk 50% of my position at 15% gain and then try and hold the rest for a larger move. But obviously I'm not holding it for a large enough move, because we can see from my entry here where I bought in on the 16th of June, okay, the position has now been up here, okay, 80%. As shown by here, TradingView gives us this very easy way to calculate that. So I made just over $10,500 on the trade, but I could have made $53,256 had I have held longer. But overall, I quite like the structure. How, as in the entry was good. We can see that volatility is decreasing here from left to right. There's a nice shakeout, tight bar. As well, volatility just before the entry in here as well gets pretty tight. Okay, so we can see that we're tightening up. Okay, that's something that I like to look for. Okay, kind of tightness in the price prior to the breakout. The breakout has a slight increase in volume. Okay, there's obviously a increase in the spread of the candlestick, so from where the open is to the close is, and closing above that, in this case $63.55 line of least resistance. I was then selling out here and I didn't hold through this first pullback. So again, something I'm doing with my own trading is working on actually holding through the first pullback to then try and capture this large move, which you can then see the obviously quick acceleration up to 80%. So the entries are good here. It's just actually how could I have captured more of this move? And this is stuff I'm obviously working on in my own trading, doing this post analysis and sharing a review. Going on to the next one, which is Fastly. So what we can see here is the stock has been up 96% from my entry. So I made $3,866, but I could have made $24,919. So I was buying the stock on the 15th and I sold it on the 17th and the 18th. I bought for just under $26,000 and then sold out twice. So sold out half my position and half again for $14,785 and just over $15,000. But you can see again, this stock just went up in a straight line from my entry. So what I like about this stock in terms of, we can see volatility decreasing from left to right. We can see that supply is also decreasing. Note on the day prior to my entry as well. Again, here's supply very low. Tightness there as well. I'm just going to delete this line so you can see more clear. Okay, this is something that I really look for these breakout trades. And again, Minervini calls them volatility contraction patterns. I call them Wyckoff wave patterns, because I just overlay my Wyckoff methodology skills on top of it. But Mark's process and strategy is a big input into what I do. I've just tweaked it and evolved it to make it more my own. But you can see it's obviously very successful. We're buying at the same places. So what we can see here is tightness the day before my entry, and again the entry has an increase in volume here, okay, and that nice wide spread. But note the tightness on the day before. So this is very, very key. Okay, so tightness the day before. Excuse my scruffy handwriting, that's quite hard with this thing. So tightness day before. Okay, so this is going to be something we want to see. Now, why do we want to see that? It's because it indicates to us that not much supply is coming to the market. Okay, absorption has happened previously. So again, this was tightening up from left to right. Okay, tightening up, as we said, supply decreasing left to right. Little pop up there, synchronicity between that increased volume, so increasing effort, and the result. And then I was scaling out on this day here and this day here. But as I said, it was up in a straight line and up 96%. So again, something I'm working on with my own trading, that yes, I hit my objective for what I was trying to achieve in terms of between that kind of 15 and 20%, but actually how can I hold some of these stocks a little bit longer to start getting these and more consistently as well, to start getting these 40%, 60%, 100%, and some of them obviously mega, like we saw with Overstock, 145% or so. So again, how can I start developing that a little bit more? And again, I've been a little bit quick to snatch at profits recently. Again, that's because volatility has been so high. So again, for me, it's been near the danger bucket volatility, or it's been in the danger bucket volatility regime, and now we're in that what I call the whipsaw bucket volatility regime. So I've still been trading a little bit I have been trading cautiously and being quicker to take profits. But anyway, so this one here is Calex. So I actually made a loss in Calex of about $1,500. Okay, so I bought in on the 27th of May, sold out on the 6th of June. So they're $26,761 and sold out for $25,262. So you can see my entry here. And again, it wasn't the best kind of VCP or Wyckoff wave breakout. This one really, I would have liked to see maybe another consolidation, okay, and then look to have gone and taken the trade. So in terms of my entry, I was probably a little bit early here. There was actually a better trade that set up over here a little bit later on. I'll talk about that in a minute. But what we can see leading up to it is we can see that supply is decreasing. We can see a little bit of an increase in demand on the breakout day itself. We can see a nice demand tail there. So this is where I took the trade on this day here, which was the 27th of May, and we can see the position then went up 58%. So I could have made $15,500 on this trade, but didn't. Actually sold out here. So again, in terms of then looking at this, I controlled my risk relatively well, but the annoying thing is I obviously sold on the bottom day here and then it reversed. So again, just like you guys, I am human. I make mistakes, and with hindsight, going back and then analysing and reviewing your trades, you go, well, why did I actually sell out here? Yes, there was so on this day here is where I sold. Yes, there was a large red candle body to the downside here, which went back to that pivot point, so that line of least resistance, $12.72. But again, there wasn't any really big volume here to suggest that the smart money, the really large institutions, the composite operator, as we would refer to them with the Wyckoff method, is selling. So why did I sell there, or at least why did I not give this at least one more day? And then the next day, okay, we can see an inside day here. We can see it's almost a little doji one, kind of a hammer as well. We get a little demand tail, and then we have the strong reversal. And then what I like is in this period here where we come back to test, okay, supply. So in this period here, okay, supply is very low, price volatility is also very low, and then we can see the setup into this entry over here, which is what I would call a backing up reversal breakout bar. So again here, I should have at least given this one more day to see what happens. Again, I wasn't down very much on the position there. I'm just trying to calculate that, kind of 5% or so, something like that. So yeah, maybe I controlled risk well, but in hindsight it was pulling back to the pivot point, which quite commonly does happen with these type of breakout trades. So I probably should have given it a couple more days, tried to sit through it a little bit more, and then obviously we can see this reversal. But as I said, this entry over here, much better entry because we just have more time and space. If I just delete all of that on the slide now, nearly ended the slideshow there. Okay, we just have more time and space for supply to be absorbed, so that in there is a much better entry. Okay, absorption of the supply. Then we have an uptick in volume, and then if you note as well on the 2 days prior, what was I talking about earlier about that tightness before the increase in volume as well? So in here, okay, hopefully you can see those, you can see these as well. Okay, so we get very, very tight in here prior to the breakout, that synchronicity between increasing effort, so increasing volume, and the result of this candlestick as well, so the widening of the candle body here, and then the close over that $15.57 line of least resistance, okay, and then the move up. And foolishly, I didn't take that trade, so a bit annoyed about myself there as well. So again, always things to be working on, things to be doing, things to be learning. So this is the final one. This is Carrier Global Corp. So recent IPO, and I made $7,100 on the trade, but I could have made over double that, $16,355, because the position has been up 42%. So you can see from the IPO base, so remember this is a IPO date, what we can see is that supply is decreasing here. Okay, price volatility is decreasing as well as we come up here. So we've got supply going down, and we've got price volatility, PV, also going down as well. So this is bullish. So what I was then doing is taking the trade here on the break of this 1875 line of least resistance. You can see that the stock was moving up basically a straight line from my entry, and there was what I call a supply shoot up here. So a supply shoot, which is an SS, is basically when you have something that looks like this. So you have this very high wick. Okay, so prices tried to go up intraday and then came back down. So it's indicating to us by deducing the candlestick what's going on behind there in terms of the forces supply and demand, that actually there's a lot of supply coming to the market here. But you can see, if I go back to the highlighter, price pulls back, but we hold the pivot point. Volatility starts decreasing. We get very, very tight in this region, and then we break out again. So there's that subsequent base built. So again, something I'm just looking at, and again, you do this by going back and actually reviewing your own trades. Again, yes, you need to have that kind of foundational knowledge and that specific knowledge as well. You need to have a good process, which is what I teach in my courses. But where you're then going to gain the most insight is actually reviewing your own trades, reviewing your own decisions that you made, looking at them and going, okay, well, yeah, I bought here, and that was a good sale there. I was up around 15% on the position or so. Here I was up around 20% on the position. There was that supply shoot. So actually this was a really good sale. But now when I look back on it with a month's extra price data as well, I now look back in this and go, actually, well, why didn't I sit through this first reaction and then this subsequent base that was then built and the breakout that came for it? So I was selling at, call it 20, well, I can tell you up here, 22.43 and 23.80. Okay, is where I was selling, but I could have then been selling at plus $27 up in this region. So again, it's something that I now look back on with more space and time and more data to analyze and go, well, I really should have sat through that a little bit more, or at least held some of the position for that bigger move. So it's something I'm going to work on much more, I think, because there's been so much volatility in the market, and again, there's such a disparity, I think, or discrepancy between the stock market and the kind of the valuations and where that is relative to economic reality, and I think that gap keeps on widening. So again, that's kind of playing with my psychology a little bit. I try not to look at anything like that or have those views in my head, because I think it's detrimental to my performance. So I really try and block out all outside noise other than the price, or the price and the volume, just executing on my process. But I'm leaving a lot of money on the table at the minute. I'm doing well, but I'm leaving a lot of money on the table at the minute. So it's how can I prevent that? How can I start mitigating that? So hopefully you have enjoyed this video. Again, if you want to learn a little bit more about me, head over to my website. You can see I was figuring out how to get a yellow circle there for these videos, because I didn't do it on the last one. Anyway, I digress. So head over to my website. You can read a little bit about me. If you want to check out my different memberships, again, all my courses are included in it and stuff like that. The premium one here for $125 a month, cancel anytime. There's annual discounts available. You get all the chat rooms, you get all the courses, including real-time alerts. So you then have it all easily accessible in your dashboard like this. And again, you can click into the real-time alerts chat room. And these are stocks that I'm sending out into the close that I'm looking at. So you can see a couple of ones last night. KBM went out last night, sign of strength breakout bar into the close. So again, these are then the ones I'm sending right to your inbox. You can see again another volatility contraction pattern, walk-off wave pattern as I call it here, and the breakout. So hopefully you have enjoyed that video. If you're new to the channel, please do subscribe, hit that like button and leave me a comment down below.